Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of more data that suggests the US economy is not regaining any momentum, and may be about to be tested by record high diesel prices. US mortgage application levels dipped again last week from the prior week, mainly due to much lower refinancing levels, as the high mortgage interest rates stay firm at these levels and at a one-year high now. Meanwhile, US PCE inflation stayed up in July at 3.7%, when it was expected to show a small dip. The month-on-month rise was much more than expected. Personal spending rose 5.8%, while personal disposable incomes were up only 4.2% from a year ago. So the squeeze continues, and although masked by inflation, many households will be feeling it. And US diesel prices are now at record highs. The second estimate for US GDP for the second quarter came in at a modest 1.5% and unchanged from the first estimate. Marginally stronger consumer spending was offset by weaker investment and more imports. The US July durable goods order report came in positively, up 12.9% from the same month a year ago, but without aircraft or defence, it was up 8.7%. Capital goods orders on the same basis were up 13.5%, probably reflecting data centre activity. US crude oil stocks were little changed last week, a bit less than the modest rise expected. Diesel stocks there have now hit record lows. Meanwhile, Meta has agreed to an $18 billion penalty to be paid over the next decade to resolve claims it designed its social media platforms to addict children. It will change the way it interacts with children. 4 of the states who brought the court claim, California, Colorado, Kentucky, and New Jersey, were expected to seek substantial civil penalties as well. In China, they have opened applications for an 800 billion yuan policy-based financing tool for local government projects to shore up its slowing economic growth. But there are questions about how much impact this will have in 2026. Singaporean industrial production extended its very positive run in July, up 5.8% from the same month a year ago, and gained similar to most months in 2026. In Australia, inflation fell in July as expected, but not by as much as expected. Their June 3.8% rate fell to 3.5% in July, but still above the expected 3.2% rate assumed by financial markets. That gave the Aussie dollar a bounce, likely on the basis that the RBA's tolerance for still high inflation may be about to get tested. The next RBA rate review is on September the 29th, however, and the August CPI data won't be known by then, by markets at least. The RBA's inflation target is between 2 and 3%, but it has been over 3% consistently every month for more than a year now. Global wheat prices are up sharply again today, and to a new post-pandemic high, as Black Sea shipments from both Russia and Ukraine have essentially stopped, and prospects for resumption look grim. The US Treasury 10-year yield is now just on 4.67%, up 3 basis points from yesterday at this time. The 30-year yield is now at 5.19%, up 1 basis point. And the price of gold is now at $4,603 an ounce, down $45 from yesterday. Silver's fallen $1 to just over $68 an ounce. But oil prices are up 50 cents from yesterday at just over $82.50 a barrel in the US, while the international Brent price is unchanged at $88.50 a barrel. And the Kiwi dollar is down 30 basis points from yesterday at just on 59.4 US cents. Against the Aussie, we're down 50 basis points at 82.9 Australian cents. Against the euro, we're down 20 basis points at 51 euro cents. That all means our trade-weighted index starts today at just under 62.9 and down 30 basis points from yesterday. And the Bitcoin price starts today at $78,459 and down 0.5% from yesterday. Volatility over the past 24 hours has remained modest at just on plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.